If we look at HECS debts, so the tricky thing with HECS is that your repayment is based on what you are earning, not the amount of your debt. So there are instances where if you own a property and you've built up some equity in it, refinancing to pay out your HECS debt can actually make a lot of sense. Yes, there's talk about the change in the indexing method to make it a little bit fairer, especially after people with HECS debts were hit with a 7% indexation. But even with lower indexation, sometimes it makes sense. Typically, this would be the case of where we've got someone who has qualified as a professional, their earnings have increased, and they're earning in excess of $100,000 a year. If we look at a $50,000 HECS debt, if you're on $125,000, your monthly repayment of your HECS debt is around $780. If we were to refinance that $50,000 into a home loan over 30 years, you're looking at a payment of $299 a month. So you're freeing up $480. If you take this up to someone earning 150 grand a year, so you've been out of uni for a couple of years, you've been working, your career has progressed, you've had a couple of promotions, you're now paying $1,187 a month on your HECS debt based on a 9.5% bracket. Refinancing that into your home loan, if you've had equity develop in the property over that time, is going to save you almost $900 a month that could be used for a myriad of other things. If you're on an income of $90,000 or below, it may not make as much sense because it's not going to free up cash flow. But this is really where we sit down, we understand what the money might be used for, whether it makes sense, and look strategically at the long term for our clients.